Morning, everyone. Good morning, accounting students. Goeiemorgen. Acheroni, Timelang, Molo, Sanbonan Nonke. I hope that in this cold morning you're ready for the accounting lesson, and we'll be continuing with our previous lesson yesterday. Remember, I'm welcoming you to Smart Online Learning that is sponsored by VT Africa Holdings. And for you to be able to participate in the activities that you'll be doing, please go to this website, www.hellosmart.com, and sign in as a guest and use this ID number that is 598751. That is your class ID number. Don't forget to go in your website www.hellosmart.com, sign in, and as a guest, use a nice name that you prefer, and this is your class ID number 598751. Okay, let's start our lesson. This week's topic, we're still dealing with analysis and interpretation of financial statements. So for now, like yesterday, what we did is we were explaining the financial statements, how they look like, what is in there, and I'll just recap a little bit so that for those who missed out yesterday, they should catch up with us. So remember, we've got our financial statements. It's the first one. It's statement of profit and or loss and other comprehensive income. It's also called the income statement. And remember, in that the financial statement of the statement of profit or loss and other comprehensive income, that's where you find your income. That's where your income goes, is recorded. That's where your expenses are recorded, depreciations, finance costs, and also non-controlling interests. Okay. And then we've got also statement of financial position, whereby you record your assets, non-current assets, which the duration is over 12 months, and current assets, which their duration is within 12 months, and equity, your share capital, your retained earnings, and also your non-controlling interest, and also your liabilities. We've got non-current and current. Also, we've got statement of changes in equity. Remember that's where you find your share capital, retained earnings, and your revaluation gain. And we've got your statement of cash flows. So as time goes on, we'll go through those financial statements, step by step, and we'll do activities. I think a lot of matriculants, they struggle with, especially with the statement of financial position. So for now, we'll just go through and explain how these things, financial analysis, we are going to go through the theory, explain how they work, what is their purpose, and what do we use them for, who are the users, and so that you should have a background, so that when we go through the calculations, maybe through a few examples from the textbooks that you're using, because I'm aware that different schools are using different textbooks. Not national-wise, we're not using the same textbook, but we'll try to pick up, textbooks that are used by a lot of schools, especially public schools. Okay. All right. I hope you still remember we went through this, the difference between IFRS and GAAP. That was yesterday's lesson. We went through this and yes. Okay. Yeah. So now before we start, I would love to do an activity just to recap on what we were doing yesterday, just to make sure that you understand, you know, everything up to so far, like everything that we have explained, just to see that you are still following. We don't want you to be behind. So I just want to do a little bit of activity, and this activity is found in the grade 12 learner book study. It's a learner book that is called Study Master Accounting Caps, Cambridge University Press. Yeah, this one, that's the author of the book, those who wrote the book, yes. So this book is mostly used by, a lot of public schools, especially in Gauteng. So that's why I chose this book, an activity from this book. So we're gonna do an activity. So please make sure that you go to this this website, www.hellosmart.com. I also want to go into this website also. Let's all together go in this website. Let's sign in. Okay, www.hellosmart.com. Sign in as a guest. I'm just gonna give you 2-3 minutes to sign in. Okay. Then your page will appear like welcome to student, join in. I think it will appear like this. Then you just put on that ID number, class ID, that is 598751. Then join in as a guest. Yes. www.hellosmart.com. Sign up as a guest, as your class ID number. All right, I hope you're in. Okay. So we're gonna do a little bit of an activity here. To recap what we're talking about, and it's just a small activity just to to keep, so that we should keep up with the pace. I think it will help us. Yes. So just join in and okay, since you're waiting for others to join in also, we'll continue. Right. Okay, my name is already there. So while we're still waiting for other students to come in, we'll continue and we'll do this activity maybe towards the end. So let's move on. Just to do a review of the financial statements users. Sometimes I know this question comes up, during the exam. I remember when I was doing matric, this question came up. And I'm telling you, you can get bonus. It's a bonus. Let's say you were struggling with the statement of financial position and you see this question. I want you never, never, ever to leave this question hanging. So make sure that you fill up this question when they ask you, who are the financial users? So you have to master this one. It's very simple. The internal financial statement users, do you remember that? We spoke about them yesterday. Let's start. Number one, just to mention just a few. Internal financial statement users, who are they? The owner, remember? The owner. And who else? Also, the directors. And the owner, if the business, it's sole proprietor, it's not a company. And here also the shareholders. Yes, shareholders. The employees. Just to see if their job is secured. The owner, just to see the profitability of the company, if they're doing well, where to improve, and how they can increase the revenue of the business. You see, and also the management. Okay. Then we move to the next one, the external one. It's I'll just list four. Were they external financial statement users, creditors, because they want to see if you'll be able to pay their money back. They don't just want to, borrow you a lot of things, maybe borrow you their plant or borrow you their machinery or borrow you money, whereas they know that your company is going down. You see. And who else also? Government, which is SARS. Yes. And who else again? If you may try to remember, we spoke about them. I said creditors, government, and also external auditors. These people, they come and review if you have done, they come and review if the financial statements were prepared fairly and without error, and there's no fraudulent, there's no misinterpretation of financial statement. And let's go to the next external financial statement user. That will be your investors. So I hope we have recapped. Here what we have been talking about. So let's move on. So the owner, we spoke about this. The owner, shareholders. Remember, if it's a sole proprietor, sorry about that. It could be maybe a sole trader. Example, maybe a vendor or cake shop owner. And maybe this side could be maybe ABC Ltd. You see, that's a company. Public good. You must remember the different types of the forms, different types of ownership. So these people, the shareholders, they want to see how profitable is their business because they're the ones who gave, the capital to the business. They're the ones who funded. They bought shares. Those shares, as they buy them to the company, it's regarded as equity. That's share capital. And they want to see efficiency of policies. This is very important. Remember, we spoke about this under the topic. Oh, yes. Yes. We spoke about this efficiency of policies. Those policies, some of them are set by the committees of the company, whereby policies are there to make sure that the company runs smoothly and there's order. You see, and those policies are there also to prevent theft and also to make sure that everyone in the company, they work at the best interest, to make the company to be profitable, to bring more revenue. Because sometimes you see where there is no policies or control in place, things can just go haphazardly. They can be a mess, you see. And purchasing, stock control and sales, many policies to be in place. Like for instance, policies how they depreciate their assets, policies how what kind of method, do they depreciate their asset? Do they use a straight line method or diminishing balance or a unit method? And then how do they recognize their assets also, and how do they reevaluate their assets that are not depreciating like land? You see, those policies. And yes, let's move forward. If expenses are within acceptable limits, yes, this is very important also. They want to check if those expenses, there are no unnecessary expense whereby the company is still starting up and employees are earning more than it's expected that they should be earning, of which it lowers the revenue of the business. And expenses like maybe the company now, I'll make an example. Maybe the company is still starting up and trying to make a lot of money, maybe a lot of money coming in. Now they create an expense whereby they buy expensive vehicles for each and every employee who's working there, of which it could result in unnecessary expense, you see. So they have to cut costs, or maybe when the company didn't do well, then the directors, decide to increase their salary and have a vacation also using the company's money, you see. So the shareholders, they want to see those things. You see that that the expenses are within acceptable limits. It was those expenses were necessary to ascertain whether the business will be able to pay its debt. That is important. And then this one, we'll talk about it later. I think, later today. But we'll do a lot of calculation on it. We'll do a lot of calculations here. I'll provide a few examples to on our next lesson, whereby we'll be calculating the ratios regarding this one. But for now, I want you to understand this, that the owners also, when they look at those financial statements, they want to see this also, that the business is able to be able to pay its debt, you see, within maybe within 6 months or within a year, and determine the pattern of progress, deterioration of or stagnation in the business. And also they want to see how the plan was carried out, that if the business is still profitable, and where to make changes. Because remember, shareholders are the owners of the company. They can call for a meeting, and they can come and vote for a certain decision. Because after all, the aim is to make sure that the company makes money. It makes profit. That's the aim of the business. Yes. So let's move on. Financial, okay. What is this? A process that extracts relevant information about a business, which is interpreted to meet a particular need. Determine financial health for investment purposes, ability of business to pay back its debt in the long term in order to grant loan, maybe to provide also loan to directors, and maybe to pay dividends also. And also there is what we call interim dividends, whereby dividends that are declared before, maybe during the financial year. You see, before the actual dividends are paid, that is called interim dividends. Why do it? Let's talk about this one. The object of financial reporting is to provide information that is useful for the purpose of decision making. Because there are a lot of decisions taking place using financial statements. After viewing financial statements, as we have already explained, that's when the investors, they want to see if is it worth it to invest in this company or is it not worth it. You see, is it worth it that as we invest will benefit something? See, that's the aim of investors. And also, is it worth it that this company should continue trading? I see. So financial reporting is very important. Okay. So we'll talk about ratios for now. We'll just talk about them. Then later we'll do exercises or calculations regarding the ratios. Interpreting ratios. After calculating, interpret by comparing results to ratio of the same business in previous years meaningful. So these ratios, as we got quite a number of them, whereby they also it's like a summary, whereby you could see that this business, does it do much sales? Does it spend a lot of money on inventory? How much does it pay? How much percentage is their gross profit? And also, is it competent to its competitors? Because remember, business sometimes, or most of the time, it has competitors. Most of the business are not monopoly. It will be just one that is monopoly out of a million. We've got this things that we will be working on our last lesson, profitability. We've got ratios under profitability. Ratios like gross income ratio, and also sales ratio, and also return, solvency, and liquidity. And also these ones are very important. These ones are very important because if the company fails to meet this, that means if the company doesn't pass this test, it means that the company must liquidate. You see, the company always has to pass this test, or it will go under what we call business rescue. I think you heard about that business rescue of the company SAA. It's also under business rescue. So for now, we won't be talking about that. I'll talk about that later. Yes. So profitability, how profitable is the business? How well is it control its expenses? Remember, for you to make a lot of money in the business, just in a logical way, for you to make a lot of profit, it's either two things. It's either you minimize your cost, your operating cost, or you increase your the gross profit percentage. One of the two, you see. But now, remember, we are in a situation whereby the business has competitors. Okay, I'll make an example. Let's say, I'll use this pen. This is company A, it produces this a red pen, and this is company B, it produces a black pen. So now these companies are both competitors. So now this pen, this company let's say it's my company, and this one it's your company. So you sell this pen for 20 rand. Now I don't know your financial statements and how you make profits, but that means if I have to stay in the market and make profit, I mustn't make this pen to be costly, to be over 20 rand, because of if it's over 20 rand, there is what the customers will all you're gonna win the market share because of you sell the pen lesser. So mine is expensive. So if yours is 20 rand and mine is 25 rand, obviously the customers will go and buy your pen. So I have to find a way that I make profit, and for me to find those ways, it's either I reduce the price to 20 rand, but now reducing the prices, I must check also that I'm making enough gross profit, enough profit on my sales. So I have to reduce what? Say my operating cost, or my cost of sales, maybe they must be reduced, or else I increase my prices. So increasing my prices is either maybe I make this pen to be different from this one. Maybe I make this pen to have maybe a lighter or a torch, and also to have a memory stick. Then I could be able to increase the price of my pen so that I could win the market share. I hope you're clear. I hope you understand. So these ratios also, that's what they check on, gross profit on sales. You see, that's where you find sales, gross profit over sales, gross profit on cost of sales, whereby you check the margin that the gross profit on sales, how much profit are we making, against cost of sales, and also net profit on sales. We'll go through this, we'll make examples. So for now, just know this theory: operating expenses on sales, operating profit on sales. I'll make sure that tomorrow, when we do this, we'll just collect examples from this textbook. I'll try use this textbook. Where is it? Okay, just a minute. Yeah. In this textbook here, I think it's mostly used by schools, by grade 12s. So I'll just try to get an exercise from this textbook, and then also maybe try also another textbook that the matriculants are using, so that you should be on one page. It's nice when when examples are coming from your textbooks. So I hope a lot of matriculants, you've got this textbook. Right. We talked about profitability, so let's move on. Then we are here. Solvency. Can the business pay off its Can the business pay off all its debts? That is called solvency test. You see, total assets to total liability. Maybe we say assets over liability, the debt equity ratio. So we're gonna do those examples. For now, make sure that you know them. And we've got what we call liquidity, current ratio, asset test ratio, debtors collection period, creditors payment period, and the rate of stock turnover, number of days, months, stock on hand. So we'll be doing quite a few examples on this. So remember, we've got, okay, let me do this. The way I said we have what? This, oh, sorry. Okay. Sorry about that. Yes. We've got profitability, you see. Maybe you're wondering why am I going back and forth, going back and forth. Because if I don't want to go on and on and on, whereas you forget other things at the back. That's why I'm going up. I keep on going back to make a summary, then I'm going forward. Because of going forward with accounting, if you know the basics, you will struggle in future. You will even struggle also in the university. That's why you hear people, they say, accounting is hard. Because of accounting, you've got to know everything that you have to learn at that point for you to move forward. Because those are the basics, you see. Because when going forward, like when you go to your first year, second year, they'll assume that you know other things. So they'll just go on and it will be like so hard. So that's why I keep on going back just to reflect. And remember, not everyone is on the same page. You see, some they just grab, they just catch it on the spot. Others they just need, patience, and they want me to repeat again over and over again. So I hope we'll bear with one another on that point. So we spoke about profitability, and there is also what we call the solvency one. Solvency, remember, and then we've got this one, liquidity. So it's three of them. So please go and study these three. Go study this because of tomorrow. We will start. Okay, I think let's start on this one. Tomorrow we'll make exercises based on this one, profitability. Then as we find time, we'll go on this one and this other one. Okay, so back to the activity. Before we finish our lesson, remember we've got an activity. And you sign in also. Remember, sign in. Hello, master. Sorry, excuse me about that. Sign in as a guest. Go to this website, www.hellosmart.com. Sign up as a guest, and I'm already doing it. 5-9. Okay, let me just review the page so that you should join. Okay, that. Okay. Here is it, 598-751. Okay. Please answer the questions. Right. Okay. All right. Let me see your questions. Okay. Sorry about that. Yes, that's where you want to come to. All right. The the question was, the activity was you have to fill in, you know, the missing words. You don't fill up the missing words. The first question was the reflect the operating profit, income tax, and net profit for the financial year. So is it the answer was statement of profit or loss and other comprehensive income. Okay, let's go to the next one. This statement reflects the net worth of the company as well as its assets and liabilities and also the equity. The answer here is statement of financial position. Remember, we explained this. I hope this you really understand. And then the other one is this one, the statement, show how the operating activities of the company affects the liquid funds of the company. That is a statement of changes in equity. And the next one is this one expresses this statement or report expresses in verbal terms how the company has performed over the past financial year and explain other information not found in the financial year. All right, that is your director's report. Then the next one, this is the last one. It expresses an opinion on whether the financial statements are reliable or not. And that is an auditor's report. So I hope we have covered a lot of theory so that in our next lesson, you don't explain theory, you just go to practicals and you just come with a lot of examples so that you should understand. So tomorrow, please prepare for those ratios. We're going to start with the profitability one. Maybe if we find time, we'll do also the liquid one. Okay. So have a nice day. Thank you very much for joining us in this lesson. Please make sure that you study for your exam. Good luck.